Hi, I'm Keon, a research analyst with Lipper, and I'm here to talk to you about fund flows for the week ended Wednesday, December 10th. Let's start with a quick look at last week's market activity. Stocks were driven down by oil fears. Both the S&P 500 and the Dow Jones Industrial Average were down over 2%. With most of the losses occurring on Wednesday, December 10th, as the markets reacted to OPEC reporting that their expected demand for 2015 will be the lowest in over a decade. This leads the market to think there'll be an increase in supply surplus and it'll continue to drive the price of oil down even further. Over the last 6 months, West Texas Intermediate crude and Brent crude, the U.S. and global benchmarks for oil, are both down over 40%, hitting 5 years lows this week that they have not seen since the global recession of 2009. Let's turn back to fund flows now. Overall, for the week, there was aggregate net inflows of $6.8 billion. This includes both ETF and mutual fund data. Let's take a closer look at our macro groups now. For the week, equity mutual funds had $7.8 billion in outflows. Taxable bond mutual funds had $10 million in outflows. Muni bond funds took in $606 million, while money market funds were the big winner on the week with net inflows of $10.5 billion. Let's turn our attention now to equity mutual funds and take a closer look at them. As stated previously, they had net outflows of $7.8 billion for the week. This was the third consecutive week of net outflows. The performance for equity funds was also off 2.3%. This goes in line with the S&P and Dow data we were talking about earlier. As we break out the group a little bit further, we see that domestic equity funds were responsible for all the net outflows, as they had net outflows of $8.2 billion for the week. Contributing the most to the net outflows for the domestic funds were large cap growth funds and mid cap core funds, which saw $2.3 billion and $1.4 billion leave their coffers. For the year to date, those two groups, large cap growth and mid cap core, have had net outflows of $26.8 and $4.8 billion respectively. On the flip side, we see the non-domestic equity for the year to date has taken in over $87 billion. Almost half of this, or just over half of this net inflow, is attributable to funds in the international multi-cap core category, which have had net inflows of $44 billion. Let's take a closer look at equity ETFs now. For the week, they had net inflows of $4.9 billion. Their seventh straight week of net inflows. Investors were buying the iShares MSCI EFA ETF, which took in $792 million, as well as the iShares MSCI ACWI ETF, which saw $760 million in net inflows, and as well as the iShares US Financials ETF, which had $670 million in net inflows. Let's take a closer look at taxable funds now. Taxable mutual funds, as stated previously, were almost static last week. They had a small net outflow of $10 million. What's interesting about this small outflow broke a 17-week streak, 17 weeks of consecutive net inflows for the group. Overall, breaking out the group a little bit further, we see that high yield funds had net outflows of $1.8 billion. Core plus bond funds took in $2.5 billion on the week. For the year to date, these categories, high yield has seen net outflows of $16.6 billion, while core plus bond funds have seen outflows of $57 billion. Of course, most of this can be attributed to the activity seen around the PIMCO Total Return Fund and Bill Gross's departure. Let's take a look at our taxable bond ETFs now. They had net outflows of $1.4 billion for the week. Contributing the most to these outflows were the iShares Short Treasury Bond ETF, which had $518 million leave, as well as the First Trust Enhanced Short Maturity ETF, which saw just over $500 million leave their coffers. Moving on to our next category now, let's take a look at muni bond funds. As stated previously, they took in just over $600 million for the week, their sixth straight week of inflows. National muni funds in the national muni category again carried the day here, as they took in almost $600 million in net inflows themselves. This puts their net inflows at $23.7 billion for the year, with intermediate muni bond and high-yield muni bonds contributing the most to this inflows with increases of $12.1 billion and $8.4 billion respectively. Let's move on to our last category now, money market funds. Money markets were the big winners last week, $10.5 billion in net inflows. This marks their 8th consecutive week of net inflows, during which time they've taken in over $75 billion and reduced their year-to-date net outflows to just around $13 billion. This 8-week streak is the longest streak since the start of 2008, when money markets had 13 consecutive weeks of positive net inflows. Well, that wraps up this week's report. If you like to take a deeper dive or look at the data yourself, please join us at our website, www.lipperusfundflows.com.